7 assets that will explode in value over the next 5 years. Introduction means aligning with the future. In the next 5 years, nothing stays the same except change itself. Economics, technology, demographics, and geopolitics are all shifting faster than ever. But while headlines spotlight chaos, savvy investors know one thing remains constant. This is when opportunities emerge. The true winners aren't caught by surprise. They identify game-changing assets before they break out. That's what this video is all about. We're uncovering 7 high-potential assets that don't just promise good returns. They're poised for explosive growth, from digital ecosystems to physical infrastructure, from overlooked commodities to emerging economies. We'll walk through each one, explain why it matters, and show how to position yourself now. Because the next 5 years won't just shape your portfolio, they'll shape your future. Let's dive in. 1. AI infrastructure platforms, hardware plus cloud services. Why it's exploding artificial intelligence has graduated from buzzword to backbone, but raw AI apps are only one part of the equation. The real growth drivers are the engines behind them: high-performance chips, GPU-osh cloud servers, edge computing devices, and AI-optimized data centers. Companies building this stack, NVIDIA, AMD, TSMC, ASML, Equinix, plus newer platforms like CoreWeave or Snowflake's AI nodes are positioned for hypergrowth. Why? Because enterprise AI deployments are exploding across finance, healthcare, logistics, and media, creating perpetual demand for processing power, storage, and low-latency delivery. How it grows hardware cycle. New chip launches drive revenue waves every 18 to 24 months. Cloud contracts. Deals with enterprises and governments lock in multi-year revenue streams. Recurring revenue models, GPU rentals, infrastructure as a service generate sustainable backlogs. Action steps evaluate ETFs like Global X Artificial Intelligence and Tech ETF, AIQ, or ARKQ. For US-based accounts, consider direct exposure via NVIDIA, NVDA, or Equinix, EQIX. In international portfolios, look for TSM CADRS and keep an eye on emerging data center plays in India, Southeast Asia, and the Middle East. 2. Green energy infrastructure, storage plus grid upgrades. Why it's exploding. The energy industry is undergoing a once-in-a-century transformation. Solar and wind are mainstream, but there's a catch: they're intermittent. To stabilize the grid, governments and corporations are investing massively in storage, electrification, and grid modernization. Assets like industrial-scale batteries, lithium-ion in emerging chemistries, transmission line upgrades, and microgrid operators are locked into decades-long growth trends. And with climate concerns front and center, the pace is only accelerating. How it grows subsidies plus regulations. Infrastructure bills and green mandates pour billions into projects. Cost declines. Battery cost per kilowatt hour continues falling, driving deployment momentum. Ancillary services, storage assets earn from frequency control, capacity leasing, demand response, on top of energy arbitrage. Action steps add diversification through iShares Global Clean Energy ETF, ICLN, or Invesco Solar ETF, TAN. Consider pure play names like Nextera, NEE, Enphase Energy, ENPH, or Fluence, FLNC. Explore utility companies in regulated markets, Europe, US, that are accelerating grid modernization. 3. Water tech and water rights. Why it's exploding. We all need clean water, and global demand is outpacing supply. Agriculture, industrial output, urbanization, and climate change are stressing watersheds. This forces governments and municipalities to spend heavily on water infrastructure, desalination, and recycling technologies. Assets tied to water rights, especially in arid regions, are becoming increasingly valuable. Meanwhile, water technology companies focused on leak detection, digital metering, purification, and wastewater recycling are securing long-term contracts. How it grows public funding. Governments across the US, Canada, Australia, and Europe are upgrading water pipelines and treatment plants. Private equity deals. Companies like Ecolab and Xylem are acquiring regional innovators for vertical integration. Scarcity premiums. Water rights in western US states like California, Colorado, and Arizona are appreciating rapidly. Action steps, ETFs like Invesco. Water resources, ETF, PHO, offer broad exposure. Corporates like American Waterworks, AWK, and Xylem, XYL, provide essential services. Be aware, water rights are regulated and can present ownership challenges. Research local laws carefully. 4. Digital real estate and web. 3. Infrastructure. Why it's exploding. Forget NFTs. The future of Web 3 centers on real, utility-based digital ownership, like tokenized rental properties, data center capacity, blockchain domains, decentralized identity, and developer tools. Platforms enabling ownership, Realty, Bitdeer, Cloudflare, and blockchain data layer startups are steadily gaining traction, one use case at a time. With regulatory frameworks improving, these are transitioning from hype to hard utility. How it grows passive income. Tokenized real estate distributes rental profits. Digital APIs, Web3 protocols charging usage fees. Anticipation cycle. Developers and enterprises build on infrastructure. Institutional capital follows. Action steps. Check out index tokens like DeFi Pulse, Index DPI via crypto-friendly brokers. For equity investors, monitor players like Cloudflare, Net, or Akamai, ACAM. Explore real-T property tokens, but only with awareness of KYC, regulatory risks, and liquidity limitations. 5. Farmland plus AgriTech. Why its exploding food security issues aren't going away. With populations growing and farmland shrinking, farmland is increasingly valuable, but wealthy investors are going deeper, deploying AI, sensors, robotics, gene editing, precision irrigation, and vertical farming. The result? Farmland owners not only benefit from land appreciation, they're monetizing yield uplift and tech licensing. How it grows scarcity plus inflation hedge. Farmland appreciates as food costs rise. Yield increases, precision agriculture improves productivity per acre. Server and IP royalties. Agri-science owners profit from tech platform licenses and seed royalty deals. Action steps U.S. investors can explore Farmland Partners Inc. FPI, Gladstone Land, LAND. Consider farmland routes or invest privately if accredited. Track AgriTech startups like Indigo and Plenty for breakthroughs, especially during partnerships with major food suppliers. 6. Frontier markets and select emerging economies. Why it's exploding. Emerging markets are no longer a monolith. While broad-based EM has its place, targeted exposure to scaled economies like South Korea, Vietnam, Indonesia, and the GCC, UAE, Saudi Arabia, Qatar, promises large upside thanks to tech adoption, energy exports, demographics, and reform. Frontier market indices offer broader access, while country-specific ETFs allow more precision. How it grows tech-led growth. Local tech redoubles GDP growth, e.g., Vietnam's fintech surge. Trade-driven expansion, ties to U.S.-China supply chain, reshoring bring investment. Resource booms, Middle Eastern and African mineral exporters benefit from energy and EV demand. Action steps ETFs like iShares, MSCI Frontier 100, FM, VanEck Vectors, Vietnam, VNM. Local blue chips via ADRs, for example, Samsung Electronics, 005930.ks. Thematic exposure, Indonesia's renewable energy initiatives, Saudi's PIF-backed initiatives. 7. Premium digital IP, content, AI-powered media, SaaS libraries. Why it's exploding. A new wave of passive income assets is emerging in the digital realm. Think AI-generated content libraries, monetized podcasts, affiliate niche sites, SaaS tool templates, and stock image platforms. These assets generate recurring income via subscriptions, ad revenue, license deals, without ongoing creator effort once established. How it grows low marginal costs. Digital content can be reproduced infinitely. AI scale. Generative engines produce new content at low cost. Platform monetization, partnerships with YouTube, Substack, Shutterstock, and OpenAI amplify reach and residual income. Action steps monitor M&A in digital IP market, e.g. Thrasio, OpenAI Studios, podcast networks. Identify emerging platforms supporting creators, e.g. Substack, Canva, Play.ht. This asset class is more DIY. By owning digital properties yourself, you can capture income and resell value directly, preparing for what's coming. Each of these assets aligns with global shifts: AI, energy, water, food, digital innovation, and emerging markets. The key isn't guessing, it's understanding where the world is headed. Smart approach: learn the trends, not just the hype. Spread your investments across themes. Invest gradually, not impulsively. Keep an eye on major global and tech changes. Factor in interest rates, geopolitics, and energy costs. You don't need a fortune, just clarity, patience, and a strategy. If this video helped you think differently about what's next, hit like, share your thoughts in the comments, and let us know which asset excites you most. And if you want deeper breakdowns, subscribe. Let's build real wealth with strategy, not noise.